Hi, this is Bill Fung, your local Denver Metro Realtor. I'm sitting here today with Patrick Langhans from Cross Country Mortgage. Patrick has been in the business about 20 plus years, and I've known him about 10 years and have used him over the years to help my buyer clients, to get into new homes. He's very well versed in the four major different types of loans, and we'll go ahead and today we're going to start with the FHA loans, and in future interviews we'll be talking about VA, conventional, and jumbo.
Yeah, thanks, Bill. So yeah, I've been in the business 24 years. I got in my early 20s and kind of just worked my way up and been helping people figure out how to buy homes, what they qualify for, and just showing them strategy and options to buy a home.
Okay, sounds great. Now everybody says FHA loans, and kind of everybody knows what it is, but I'm going to ask Patrick here a little bit about, what are the hidden secrets that people don't really know about FHA that they really should. And then what are the advantages and disadvantages? I'm going to go ahead and let Patrick just kind of take this away and tell us, what are the top 5 hidden secrets of FHA that everybody should know, but nobody really does.
Well, I'd say the first one is most people get it mistaken for a first-time homebuyer program, meaning only a first-time homebuyer can use an FHA loan, and that's actually not the case. So pretty much anyone who qualifies for an FHA loan can get one, but you don't have to be a first-time homebuyer.
Okay.
Some of the biggest benefits of them, FHA loans are a lot more lenient on qualifications. So you may not have to have as much income to qualify for an FHA loan. You may not have to have the highest credit score. In fact, technically, there's not necessarily a minimum credit score on FHA. So FHA is more lenient. So if you don't have the perfect credit profile, FHA might be the right option for you.
So when you say credit profile, is there a number score from A to Z? What might that be?
Yeah, so if you have a 580 to a 620 credit score, that's like one bucket of FHA, and you may need a little bit more down payment to qualify. If you're over 620, that's kind of the sweet spot with FHA. And when I say sweet spot, that's where you're going to start to get a better interest rate, better payment, that kind of thing with FHA. But a lot of loan programs, they will give you a higher interest rate based on your credit score, and it could be every 20 points. So a 720 credit score would get a better rate than a 700 better than 680 better than 660, and so on. FHA is a lot more lenient, so their tiers are a lot more spread out. So I'd say it goes 580 is kind of the start. When you get to 620, you get a little bit better deal, and then from there it's all, FHA is not as picky about your credit score. So
okay. Now I've had people talk to me, and I think this is one of the unknowns, is that they say, oh, I get my credit score from Credit Karma,
right,
or my bank sends it to me with my credit cards, and it says I have 700 or 800. Are those type of scores truly valid when you're trying to get a loan, whether it be FHA or the others, or does it have to specifically come from the mortgage company that you're going to be actually applying to get a loan from them?
Yeah, it's hard to say because I never know where, someone may be getting that score. The mortgage company is always going to be the most accurate, but if your bank or your credit card or Credit Karma or wherever, if they're sending you a credit score, and with the credit score it says it's a FICO, FICO score, then that's usually pretty close. That's a good sign that it's accurate. But we do pull 3. So if your bank's only sending you 1, there's 2 others that we need to look at. So a mortgage company is definitely going to be more accurate.
Okay. So probably what would happen, and I'm just guessing, the bank's going to send you the one that shows probably like your highest credit score because they want you to feel good.
It could be, yeah.
Yeah.
And then there's like Credit Karma and a lot of other credit services. They use what we call a consumer credit score, and it's a little bit more lenient than a mortgage credit or a FICO credit score. So if you're signing up for one of those credit monitoring services, most of them, especially the free ones, are just going to provide a consumer score, not a FICO score. But if it says FICO, FICO, then that's probably what you would see when we pull your credit.
Okay. So definitely to me, that's one of the kind of like the little hidden pitfalls or secret that a lot of people don't understand and know about how credit scoring works, because my understanding is that there's actually almost like 30 different types of credit scores that can be pulled, whether they be for car loans, for credit cards, stores, even to get utilities and stuff. So each one of them are different. So you want to make sure that if you're actually looking to purchase a home, you want to talk to actually a loan officer and let the loan officer do a credit check. And then the quick question of this is, people say, well, I don't want too many people to pull my credit score because it's going to drop.
Right.
Tell me a little bit about that.
Yeah, so the biggest, first of all, if you go out and have your credit pulled by 5, 6, 7 people within a week, that could hurt your score. It looks like you're running out of money.
Okay.
But credit pulls on your credit are probably they're one of the smallest factors in determining your score. The most important thing in determining your credit score is on-time payments. So if you have a late payment on a credit card or whatever, that's going to hurt your score way more than a credit pull. The next biggest factor when determining your credit score is your debt balances compared to how much your credit limits are. Mm-hmm. So the lower your credit card balances compared to how much available credit you have, the better your score. So it goes on-time payments, usage or debt balances, and then the third biggest one is length of how long you've had credit. Mm-hmm. Those are the top 3. A credit inquiry, if I pull your credit once, it's not going to hurt your score. But it's the multiple credit pulls within a short amount of time and from different banks. Like if I pull it and then you apply for a credit card and then apply for a car loan and a student loan, that's going to hurt your score. But one pull won't hurt it. And then the last thing on that, we can do something called a soft credit pull, which that guarantee it won't even show up that we pulled your score.
Okay.
So
great. So we talked a little bit about the credit score, and everything you've told me then would apply to the other type of loans, such as VA loans, the conventional loans, and the jumbo loans.
Yes, but VA is a lot like FHA when it comes to credit score, but all the other types of loans are a lot more picky.
Okay.
So if you have a lower credit score, I would say anything under a 680, you're probably looking at an FHA loan. Okay. Or a VA loan. If you're a veteran, you could do a VA loan.
Okay, which is why a lot of the loans nowadays for most people, especially when they're buying the first home, is an FHA loan. By any chance, do you know here in the Denver metro area, approximate percentage of loans that are approved, how many of them are FHA loans, percentage-wise? Any idea?
I'd have to look that up.
Okay.
I'd be willing to guess, if I had to guess, most people that buy close on some sort of conventional.
Conventional,
yeah.
Okay.
I would say the majority, if I had to guess.
Okay, all right. Well, we'll see if we can get additional information. That just kind of popped into my mind. So now with FHA loans, we know that basically minimum is a 620 credit score.
Well, you can go lower, actually. So but that's kind of the sweet spot to get the best deal.
Okay. Now then, other things with FHA loans that we need to know about is there a situation where if somebody already says, I already own a house, mm-hmm. and I'm going to go ahead and go buy another house, mm-hmm. Can they use an FHA loan if they own one house and now they're going to buy a second house?
Well, most of the time you can't have two FHA loans at the same time.
Okay.
There are some exceptions to that rule.
Okay.
One of the exceptions would be if you were like relocating. So you own a home on the East Coast and you're moving to Colorado. Your home on the East Coast is FHA and you're moving here because you're being relocated. They'll allow you to do that. There's some other exceptions too. Even some like life circumstances where you can use an FHA loan again.
Okay.
Yeah.
Well, that's good to know because I've always heard that you can only have one FHA loan.
Yeah, so with mortgages in general, there's a ton of general guidelines. And then when you dig in, there's usually an exception for each rule.
Okay, that sounds great. Now, how long does it usually take to get approved for an FHA loan? Can you get one approved in like 2 weeks or how long is the average? Or
so for me to get someone approved, it's really up to the person. But solid job, credit, and you have some money, as long as you're getting me what I need, I could get you approved in a few hours.
Okay.
I will say this, there's a perception out there that FHA loans are harder to get approved, not as good of loans, the appraisals are different. They're really not. An FHA loan is just as easy for me to get approved as a conventional, a VA. It really doesn't matter on my end, but there is a misconception out there that FHA is harder.
Okay. Well, and we know times change, but you mentioned something and people are always wondering, how much is an appraisal and specifically FHA? I know you can spit out a figure today, but it could change tomorrow.
Mm-hmm.
But generally for this conversation, and I'm not going to hold it to you because it could change 2 hours from now, about how much is a FHA appraisal, just going out there to buy what we call a single family detached home, and how much would be an FHA appraisal cost for buying like a townhome or condo? Is there any difference?
There's not really, but they're somewhere between $650 to $850.
Okay, and they have to pay that up front?
Typically, yes.
Okay, so
now sometimes we'll make an exception, like that right now in this market, when buyers have a little bit of an advantage with negotiation, you may get someone under contract and say get the seller to pay all that buyer's closing costs, right? So in that case, if you negotiate it so that the seller's going to pay all the buyer's closing costs, we don't want them to pay for the appraisal. We want the seller to pay for it.
Okay.
So what we would do is we call it invoicing, which means we're not going to charge you for the appraisal. We'll have the seller pay it at closing.
Okay.
And we've had clients that struggle. They're like, hey, I can't pay that appraisal, or I would rather pay it at closing because that's when my gift is coming in or wherever their money's coming from in. So like I said earlier, there's always exceptions to the rule, but in general, yes, you're gonna pay that up front.
Okay. Well, recently I had a couple that actually used you, and we're kind of in a buyer's market now. So we had asked for and they were doing an FHA. So we had asked originally that we would go ahead and do $10,000 seller's concessions. But when we explained to the seller that basically there was no additional cost because of the way we had originally structured the transaction, we were actually able to get $15,000 for the buyer. And in this particular case, because there was an additional appraisal cost, it was paid out of the seller's concession.
Yep.
So there are little nuances, if you want to say, and that's where it's really helpful to have somebody who understands all the ins and outs of FHA and just kind of go ahead and talk.
Well, here's another benefit of FHA when it comes to the seller paying for costs. On FHA, a seller can pay for up to 6% in closing costs, so 6% of the price of the home.
Okay.
So if it's a $500,000 home, seller can give the client $30,000 to cover closing costs, buy down the interest rate, So they can pay up to 6% with a minimum buyer down payment. On a conventional loan, if the buyer's not putting more than 10% down, the seller can only pay 3%. So basically, on FHA, most of the time, the seller can pay twice as much in closing costs and use that money to get lower rates, whereas on conventional, they can only pay 3%.
Okay. Now, in FHA, with single-family homes, I know there's something called mortgage. I always get PMI and MIP messed up.
It's all interchangeable.
It's all interchangeable. So there is an insurance that's called, I'm going to say mortgage insurance premium.
Pretty good.
On that one. Does that ever fall off in an FHA loan? Go ahead.
So it changes all the time.
Okay.
So mortgage insurance, it's part of your monthly payment. And what FHA charges it basically to fund the program, because it is a government program. FHA is Federal Housing Administration. So to do an FHA loan, you do have that monthly fee that they charge. Now, within the last couple years, they lowered the fee. It used to be that that fee could go away from your monthly payment if you paid down your loan enough. But currently, as it stands, when you do an FHA loan and you close, you're going to have that monthly fee, and it will not go away as long as you have that loan. Okay.
All right, so I'm just going to bring something way out of the blue, because I've been in the business for 35 years. You've been in the business for 20 years. When I started, at one point, you could get what I call a rebate back from does that even still exist anymore from the mortgage insurance premium, or?
Yeah, so if you're going to there is an MIP, that's a one-time fee at closing.
Okay.
So that's the mortgage insurance premium, and then the monthly mortgage insurance is what you pay every month.
Okay.
If you're going to buy a home today with FHA, you're going to have that monthly mortgage insurance. You're going to pay the premium at closing. So right now it's about 1.75% of the cost of the loan. Okay. And then let's say rates drop. And it's a year later. If you refinance on an FHA loan, they will typically give you some of that mortgage insurance premium credited back to you.
Okay.
But that has to happen probably within the first 2 or 3 years.
Okay. And any loan officer, when they do that, the way the program works, that's done automatically. You don't have to ask for it.
No, FHA applies it.
Okay.
Yep. So when we do an FHA loan, we have to work out of FHA's system.
Okay.
So all that stuff's kind of logged in there, and you get those credits.
Okay. Now, we have seen some houses in pretty poor condition.
Fixer-uppers.
Yeah, fixer-uppers. Can a person go ahead and get an FHA loan on a home that really needs a lot of fixing up? Because I have heard in the past, FHA with the appraisals have standards like, I'm going to say like no exposed wood or glass can't be broken. And so you get a house that's in pretty bad disrepair. How's that work with trying to get an FHA loan?
So there's 2 answers to that.
Okay.
In general, when the appraiser walks through the home, they're going to look for visible health, safety, and structural issues.
Okay.
So it has to be pretty blatant. It's not like a home inspection where they're testing all the utilities, all the appliances, sticking their heads in every crawl space. So it's just a walk by, basically visual inspection. That's what the appraiser does. And if they can obviously see a health, safety, or structural issue, then they will notate that on the appraisal and say, before this buyer can move forward, before we can close, these things need to be fixed. Okay, so that's just in general on any FHA loan, that's what the appraiser is going to do. Okay. So if you have a total fixer-upper and you're walking through and going, wow, this one needs some work, it probably won't pass the FHA appraisal.
Okay.
So that's the first answer. So in general, you want a decent home. Sometimes things pop up and it's no big deal. We get the seller to fix it. Maybe there's some peeling paint. Maybe there's, a cracked window,
Right.
something like that. That, pretty easy. We get the seller, we renegotiate, seller fixes it, we close. If you're thinking it's going to be a lot of work, we could look into, it's called a FHA 203K loan.
Okay.
Now on those, we kind of go in knowing it's going to need work. And the way those work is we take the house, we look at what needs to be repaired, we come up with a plan to repair it, like with a contractor, determine the cost, and then we finance all the repairs into the loan. So that would be, so basically one of two things will happen. It's minor stuff and we get the seller to fix it and we go ahead and close. If it's major stuff, we kind of got a plan ahead, and we could do a 203K loan where we could kind of remodel the house or bring it up to standard.
Okay. So let's say I have a buyer who originally was just going to get a house, that was in pretty good shape. So you qualify them for the loan. Now all of a sudden we find a house that just sucks.
Yeah.
or we kind of joke, barks like a dog.
Yes.
Are there additional qualification requirements for the buyer to qualify for the FHA 203K?
Yeah. Yes, but not. So there's extra steps, but the same credit score requirements apply. In general, the same qualifications apply. But for instance, if you're looking at a $500,000 fixer-upper barks like a dog home, and it needs $50,000 of work. So if it's listed for $500,000 and it needs $50,000 of work, you have to qualify for $550,000. So you have to qualify for the price and the improvements.
Okay.
And then as far as steps, they're not very common, honestly, because they take longer. So you're probably talking 60 days to close.
Okay.
You have to have a good contractor, and you can't do fix it yourself.
Okay.
So you'd have to find a licensed contractor who's bonded, insured, and then they have to do a line by line bid with everything they're going to use and the cost of it. So they're just a little bit more work.
Okay. So the licensed contractors, I don't suppose by any chance you have a list of approved licensed contractors for FHA 203K loans?
We do, and so a lot of times when people get a contractor, they're looking for a deal.
Yeah.
It's not going to be one of those contractors.
Okay.
We need real good business people contractors. Actually, Home Depot and Lowe's are great.
Okay.
They deal with them all the time, so they know all the stuff we need. Probably the biggest holdup or issue on a rehab or a 203K loan where we're going to remodel the house or fix it up is the contractor not getting us what we need when we need it. And so that's why we do have a list, and we recommend even some of the big names like Home Depot and Lowe's.
Okay. So if I have a buyer who would like to, say, become a real estate investor, and so they want to go ahead and get into a house, I'm going to use the word inexpensively with as little money as possible, then they would go ahead and get into that house as a owner of the house, not as a rental right in the beginning.
Right. So FHA, you have to be living in the home.
Okay.
So you can't do a vacation home, a second home, or an investment property.
Okay. So then this is actually pretty good, is if you have that buyer that is as an investor minded to maybe look at a home that's not in the best of shape, but realizing that they could get into it, get I'm going to say an improvement loan, FHA 203K, and therefore be able to buy that home definitely under the market value, and then improve it and get, I'm going to say, quote, automatic equity in the home. By that.
You just want to look at what kind of discount are you getting, how below market are you paying, and then you want to look at the other homes in the neighborhood and say, what would it bring me up what would it cost me to bring it up to
Okay.
the rest of the neighborhood? And you add your price and your improvement, and if that's still below the average for the neighborhood, then yeah, you're walking into some equity. But some other things people do, if they want to get into real estate investing and using FHA, is if you're buying your first home FHA, they call it house hacking, but
Right.
there's a couple things you could do. You can buy a home, move into it. Let's say you have 3 roommates right now,
Mm-hmm.
and you're renting. You could buy a home with FHA, move in, buy a 3 or 4 bedroom, and then tell all your roommates, come on guys, move in, and now you're the landlord. They're helping you pay your mortgage. Another thing you could do is you could buy a multi-unit property.
Okay.
So a multi-unit property is like one building with 1, 2, 3, or 4 units attached.
Okay.
So, and then you own the whole building.
Okay.
And so you move into 1 unit and rent out the other 3.
Okay.
So you're still occupying the residence, but you're also renting it out. So it's kind of a house hack on a way to buy an investment property that you're living in with FHA.
So really, there's a lot of different options if you want to use an FHA loan. And I think a lot of people don't realize that it's not just to get into a house that's in nice condition so you can be a homeowner, but you could actually get into a house that maybe needs some work, and then you don't have to get into it and then try to go to the bank and get a HELOC or a second mortgage or something like that.
Or borrow, on a credit card. So if you're going to fix up the home with an FHA loan, you're rolling all the cost of the repairs into your mortgage. So it's all one loan, but the FHA loan paid for all the improvements.
Cool.
Yeah.
Well, we just basically touched a little bit on the FHA loan. There are a lot more details and a lot more options that you can take advantage of with FHA. But let's go ahead and wrap this part up about FHA loans. And again, this is Patrick Langhans. I call him Patrick. You don't have to call him Patrick Langhans with Cross Country. I will have his information down below, and if you have any questions, please feel free to go ahead and email me, text, write a comment, and I will respond back. And then of course, if you want Patrick's, in fact I'll have you do it right now. Patrick will give you his phone contact number, so if you have questions you can go ahead and call him directly.
Yep. 303-303 209-7812
with Cross Country Mortgage. You want to try doing an email?
No.
Okay, so we'll do that
long.
separately. Well, thank you for watching this. Again, this was about FHA loans. We are going to be doing a series. So once all the series are put together, we'll go ahead and put links. So if you're interested in VA loans or conventional loans or jumbo loans, you will be able to go ahead and click on those once we have those links in place. So again, I'm Bill Fung, your local Denver realtor. And if you have any questions or if I can help you in terms of purchasing a home, please give me a call. Thank you so much. Take care now. Bye.